Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Tuesday, October the 22nd, 2024. Again, it basically was a more of a range-bound day, even though the internal moves on the hourly and the lower time frames did give us plenty of opportunities and was able to, put together some good trades and make some money. However, I'm going to start here with the S&P 500, and in the ES, I have once again played with how I wanted to label and count this particular minor fifth wave up. I've gone through several iterations, and each one, I'm coming back around to moving the minute degree 1 and 2 down, and then from off of that low that we actually had on August the 7th, all the way up to the high that we had on October the 17th, I am labeling now as minute wave 3. And before I had pushed the 3 up to there, moved the 3 and put the 1 and 2 here and changed all this to put the 3 here, but it just doesn't fit because what's happening and the coordination actually between the S&P and the NASDAQ remains strong basically because of the Mag 7, because of the heaviness of the tech sector within the S&P 500, particularly in the top 10 weighted stocks. So with that in mind, I want to keep the NASDAQ and the S&P pretty much in the same count, not necessarily the same internal patterns, but the same count. And I have the NASDAQ also within the minute wave 4. Now, you're going to say, wow, that's a big 3. And so the 4 should at least get us back to 57.68, 57.70, somewhere in here. But there's the fourth wave. Again, minute 4 comes down and should find its terminus within the price territory of the minuet 4th. Now, it's way up, and that 4 is really small compared to the 2. I get it. I really get it. But the market in and of itself has become pretty strange. And so I could move the 3 down to here, put the 4 down to there, and that throws us back down into side this. And I may do that being that this is 1, 2, 3, 4, 5 for the 5. In fact, I'll do that right now. I was counting it a little bit differently before, and now that I stand back and look at what I did, I can move it. And we're going to put the 4 down here. This is not lower. This is the lowest. So if I put the 3 and the 4 there, that puts in the 5. And for the 3, instead of it kind of being as a part of a fourth wave, if I had to label it here, because it just doesn't jive very clean. So I am going to now change it back and now show that 1, 2, the 3 would have been there. It didn't come in that way. That's okay. So I'm going to take that one down. And then there's the 5. So the 3 is not the shortest wave. 5 is. So based on that, okay. So we have 1, 2, 3, 4, 5. We're done with the minute 3. We're in the minute wave 4. Initially, I think we're going to continue to find support at 58.50. The market is very, very hesitant even to go down and give it a good test. They're holding this market up. And I think that there's probably several reasons for it. But again, I think we come down and who knows? It could be a whole bunch of stuff like right now as we go back in and we're looking at the Dow. The Dow's down 150. The NASDAQ's down 40. So maybe we could get that quick C wave down and break that 58.50 and get down to, actually, I would 5,800 would be very acceptable for me. And the reason being is that I know that there's a lot of support. And actually, there's some volatility triggers sitting in the SPX right around 5,800. And 58.50 and just below turns into the equivalent of 5,800 in the SPX. And if that starts to break, then we got, again, the volatility triggers being triggered, which they did in the Qs, in the spiders again today. They went down, they cracked them in the SPX, in the ES. They broke the higher level volatility triggers. But yep, we went down from there and then was just rallied. They took it all back and we ended up closing above. So it remains a little bit more difficult because the market is trying to posture for expiration. They're posturing for the election. That's keeping volatility in the market. Today we saw, just within stocks that are a part of the Dow and the S&P and the NASDAQ is Microsoft. Microsoft got a bid today and a whole bunch of options. So it was the options trading that drove the price escalation in Microsoft today. And it traded very close. I think it did trade at one point over 430. And again, very heavy in the options, very heavy options trading for expiration on Friday. And I think some of that will roll out, to be honest with you. But it just became very interesting. Now, Microsoft actually reports, and I'm not going to see that. Okay. So let me do one thing. Let me go like this and bring it over to my other screen so I can look up and see when do these earnings come out. Actually, next week on the 30th, Microsoft earnings are reported. Remember what I had actually said is that there are quite the bulk of the Bank 7. We have Tesla tomorrow, and then everything else in the Bank 7 comes next week. So with Apple on the 31st, there's a couple that are on the 31st. So again, we're getting a lot of play there. But I think that the bulk, I'd like to get this fourth wave done because I think from here, we begin to shoot higher and to complete the minor wave 5. And again, what I have, they should still be up there. There they are. I have there, but I will be able to get some, and I still believe we have 59.95 to 6,000 to 6,040 to 6,050 will present some resistance levels that will prove to be a little bit hard to get above. And I think that they'll go and test them. And then I'm going to be looking for the completion point. Now, this shows 62.41 for this. Now, I could add one more. And let me that's 2. And let's go here to, let me just see what this is going to look like. 2.882. And see where that one comes in. Way down low. So any of these are just, they've all been exceeded so far. So I need to go back over there, and I don't need to show that. But there might be another one in between. But the important thing, again, even though this is 3.618, this is where intermediate wave 3 would be 3.618 times the length of intermediate wave 1. But what becomes more important is the structure now. Because we've exceeded levels that you would associate with that fifth wave, or just even with the third wave. So it comes down to the structure. And as soon as we're done with this minor 5, I believe we will be upwards of above 6,000 to complete it. And I think a bulk of that move is going to happen next week as we begin to get these earnings reports. Now, that's all based on the fact that they're kind of going to come out with decent earnings. If they do not, then, boy, this is going to be not a pretty picture. It's not going to end well. And again, we've got all of this in the buildup to what the seasonal charts continue to show as a pretty strong upside move in November into the first couple of weeks of December before we get a downturn. And that's where that's what I keep looking for in terms of the year-end posturing. So here we are. I'm going to come down to the 1 hour chart and see what we got. See what it looks like. You can see it's, and wait till we get to the NASDAQ, it's even kind of worse. But I think we can kind of pull this out as an A and then an ABCB. And now we're starting back down in the C wave. So what can that look like? Well, I think I can go something like this if we're just going to put in what we're thinking and that, because it's a little bit irregular. And we're going to come this way and we have it down where C would equal A at 58.42. So again, we're still hanging out well above 5,800. 1.618, 5803, still keeping the market above 5,800. Basis the ES. If we go down to 5803, we will have broken 5,800 in the SPX. And that would be enough to trigger again the volatility trigger. And that could start, it could start moving the market towards risk off versus risk on. Now we continue to see volatility kind of hanging out up higher. And, you know, a lot of reasons, one of them being, you know, the election. Second one being that we've got a hotbed of trouble in the Middle East and in the Ukraine. It's totally unsettled. It's totally like unknown right now, which is like still why we're seeing gold continuing to rally, platinum continues to rally, silver actually down a little bit right now, but just shy of 35. So these rallies have been very, very strong in the precious metals. And again, world conflict does send a lot of money, safety, into the precious metals, particularly into gold. Now, back here in the ES. So if I'm looking at this like this and saying this is A and that's a B, strange all as it is, or it can be a double, could be a double. Now we got a lot of ABC and an X and an ABC and an X. So I think in the NASDAQ, it is working out to be a triple. So and it may be done. I don't know. But we're going to see this C wave coming down if that's what it is. Again, this has not been easy to kind of view. I do understand and I get where it's like, okay, well, this kind of is a little bit of a, you know, a W maybe, but the W is kind of over here, maybe, strange looking, an X wave, and then a Y kind of there over here, like this could be a Y, and then this would start a Z. I don't know. Or an X. I don't know. And because I think we need to come down. But you see, they only get it so far and they start stepping back in. So again, it is not difficult because it is not difficult. It is difficult. Just because the market's got a lot to deal with. And when it comes down to an individual, if something got recommended, or something, the position got put on by a lot of people and a lot of traders in Microsoft, and then we saw what happened there. Is it a one-off type of deal where Microsoft's going to be down $8 tomorrow? I don't know. Or is it going to continue to rally based on what we had? I don't know. Apple continues to hold itself above like 234, 235 until we know we got 236, then we got 7.5, and then we have 240. So these are still in play. I think traders are also trying to look at year-end type moves. Where do we move the market from? Where do we go to? So a lot of things, you know, in trying to get together without having a cog in that's, you know, a stick in the spoke, so to speak. And we're just going to have to take it day by day, to be honest with you. But I do still feel that we have additional upside, first of all, to complete intermediate wave 3, minor wave 5 and intermediate wave 3. It's not done yet. So we're still in the minor wave 4 of minor wave 5. And then we still have that fifth wave up, which I think could be very dynamic. And then we get up here in the S&P, 6,000 to just above. I think they will go and test that JP Morgan collar. Now, going to take a look at the 4-hour chart. Let's take a look at the, let me go out to the daily. Maybe it's not going to be quite as crowded. There we go. So you can see that the 8, got caught up in a little bit of the downside, so it's going flat. The 20 still angling higher, but if it comes down, it'll go flat. If it goes far enough, it'll turn lower. And here's the 200. And I think the 200 will start to go flat right underneath there, and that's going to provide some pretty strong support. Now, if the market takes off from here, I'll figure it out, but we continue to find that we should have resistance at that high, 59.27, so we'll go 59.30 to 59.50, 59.95 to 6,010, and then 6,000, I think 35 to 6,045, and then 6,050. So we have resistance points, even though that's uncharted water up there, we should have these resistance points just because of the number. All right, over in the NASDAQ. The problem child is sometimes I like to call the NASDAQ. NASDAQ have not changed out of what I think it's probably still doing a diagonal, but still also remains in that the minute fourth wave. And as it stands, I believe that minute fourth wave will overlap wave 1. Unless I move wave 1 here, down to here and here, and then, but see how big this is for a minuet wave 1 of minute wave 3, minuet wave 2 of minute wave 3, and then going into it this way. So I think it's just kind of easier to keep it in the diagonal because it certainly is trading like it is. And then just bringing it down. So the 4-hour, we can see there's the 3, A, and then I'm going to go down and count that out for you as best I can right now. This is a mess. So I can count this basically as an A, because in all honesty, from there, I got 1, 2, or A, B, 1, 2, 3, 4, 5. So it's an ABC A. It does give, if we don't stop here, we kind of turn around and come back, we can come back and almost equal that high. And then we got a big ABC flat. But I still think that this whole thing is a part of this fourth wave. And this is just the A wave. And then we have ABC up, ABC down. So it's A, ABC, and we're looking for the B wave, right? So we got to go down a degree, the sub. So that's A, ABC, ABCX, ABC as itself, and then we got this X wave right in there, or in here somewhere, kind of went up and came flying back down. And then we have ABC, and I'm sticking a B on it. Now, again, even inside here, what could all of this be? I'm open to suggestions, folks, and I appreciate it. I really do like hearing from others. But again, I think we had one comment which I really appreciated, basically saying that it's going to stay away from the NASDAQ because it's just too, not that it's complex, it's too choppy. It's going back and forth. And so, to try and pick a trade and decide you're going to put it on, within the next 10 minutes, they destroy the trade if you're using options. Or even if you're just kind of using an ETF or whatever you're using, it kind of gets all messed up. And actually trading the future, that can happen pretty frequently as well. So the best I got right now, there's the there's the minute wave 3. Here is wave A, and then we go through basically almost a triple for the B wave, a triple ABC for the B wave, at least a double ABC. I think it's a triple. And that is where, maybe we get a lot of different interpretations of what all of this is, and I'm open for it. It's corrective no matter what, but I still think we got one more down. And again, these have still there, 236 and 382. And notice now that if we do get a C wave underway, minimal support at 20,309. I think that's just a pause. and then we start to come back down. But it could contain it, right? And then we go up again or down again, or we continue in this sideways motion. But if it comes down and we get a decent enough decline going, we have 20,309, just a pause. Where can we complete? Well, I got 20,175 down to 20,128. And that's where wave C would be 100% of wave A. That works. If it goes a little bit further, flips outside of this boundary, which I think it could do because I would connect it to the boundary, right? Going back out where wave 2 connects to wave 4. So if wave 4 comes down, then this is going to just widen. Okay, so the boundary is just kind of just there right now, not necessarily signifying that the market should not go below it. So if we come down to the 382, so this would be 100%. If it comes flying all the way down, then gets below 20,000, it's going to shake up a lot of stuff. And along the way, again, break the volatility trigger, break the put wall, break through things that could accentuate or accelerate adjusting selling. So that we could get that, and it could just go because we're breaking through things. And so the full board would be down here at 19,868 to 19,835, 1.618 on the C wave. And this is just for the whole 4. So this is for the whole 4, this is for the whole 4. And this is just a resting point. And that's kind of what I think. And what do the moving averages here look like? Kind of like a tangle. Well, they're actually not doing bad. There's the 8, wondering why it's kind of left out here in the hang on its own. And then we have the 20 still, but stuck right there. So we know it's either going to go flat if we start to come down and then eventually turn lower. And we have the 50, which will go flat from here if we start to head lower. And the 200 will start to go flat. 200 will provide some very strong support wherever it goes flat. I do not expect the market to go there. If it does and breaks it, then this is all something different. Okay? Again, remember what I said. There's the minor 4. We're not out of the woods yet before we can say, oh, this could be a B wave and we're going to come down in a C wave, stronger C wave. Stranger things. I'm not counting on it, and it's kind of a distant alternate, but it's not gone. All right. That's going to be it. Let's take a quick look to see what, if anything, we have coming out tomorrow. Existing home sales, Fed beige book at 2 p.m., existing home sales at 10 a.m., and one Fed governor out speaking. Thursday is when we start to get some chops in terms of economic data. Initial jobless claims, S&P Flash U.S. Services PMI and Manufacturing PMI, both at 9:45 on Thursday, and then also on Thursday, new home sales. So not the strongest week, but, it's kind of like we'll have to wait till next week when we get all the earnings. All right, that's going to be it for today. The next update will be on Wednesday, October the 23rd.